Welcome back to EDS, and in this video I'm going to share with you how I shifted my mindset that allowed me to become a profitable trader. And it's a very simple mindset shift and anybody can do it. It's all about how you look at the market. So at EDS, as you guys probably already know, we write options contracts or we sell options contracts. We are short the contracts basically. And when you are short a contract, you want price to stay away from your strikes, from your contracts. And one major benefit of being short contracts, and specifically we like to write naked or undefined contracts or positions even. And the main benefit of that is that if the market moves against you, it allows you to follow the market. And this is the key thing that I learned, and this is what allowed me to become profitable. So we're going to take a deep dive into a couple of positions that we've got open in this live portfolio. It is a Sunday, the market is closed right now, so let's just take a look. So the first position that we're going to have a look at is GDX. So GDX right now, it shows a negative P&L, but we're going to go into more detail. We overall on the position have a net negative delta of minus 6.65, which is very small. So that's basically delta neutral, which is good for us. It has an IV rank of 46, which is good because anything over 30 is high. Of course, this had a much higher IV rank when we originally placed the position. IV has come down a little bit, and there's 33 days left on this contract. So this is the chart for GDX, and this is where we currently are. We have our strikes at the 43, our short call is at 43, and our short put is at 39. But this is not how our position started. So if we look at the order chain, our position was originally, our strikes were at 31 and 38. Okay, so our short put was down here at 31, way down here, and our short call was up here at 38. And as you can see, price has completely blown past our call side strike. So how are we still able to be in this position? How do we still have a chance of making money? Well, we originally placed this position around here, okay, and price pretty much just went straight up and it hasn't stopped. So let's look again at the order chain and see what has been happening. So price moved higher. So what we did was we rolled the put side higher and collected a premium to the 34 strike. We rolled it higher again as the market kept moving, and we collected even more premium. And then we rolled it even more and turned this strangle into a straddle, making our short put and our short call at the same strikes at 38. And then what we did was we bought the guts and sold the wings. So what we did was we bought back our 38 strikes for both our short call and short put, and then sold some more contracts that were then out the money at that time, which was at 36 and 43. So what you can see we did was we managed our position. Our original strangle was being tested on the call side, so we rolled the put side to collect more premium, and then when it was tested too much, we then bought back the whole thing and sold a fresh new strangle using the premium that we collected. And overall we were still in a net positive premium. So we essentially rolled the dice again. We gave ourselves another chance of being right, and this is the fundamental change that allowed me to be profitable, because even though these trade setups are very high probability of working in our favor, sometimes they won't work in our favor, and it's managing trades in this way that allows you to keep on giving yourself the best chance of success over and over again. And we're just going to basically keep on doing this over and over until eventually we win. So in theory, as long as your position is naked, you can roll forever. So there's no reason to, you'll never be forced to take a loss as long as you're on the ball and you're at least logging in once a day to manage your positions. But as long as the market doesn't move too far against you, you can just keep rolling forever. So, that doesn't mean that you won't ever take a loss. There might be times where it's not capital efficient to keep a position on. There might be better opportunities elsewhere. But in theory, you can just keep rolling and keep resetting the odds in your favor. And so then what happened was, we were in this new strangle and price still kept moving higher. So then what we did was we rolled from 36 to 39, and that's what this position is right now. So as you can see, we were about to make another adjustment and roll the put side higher, but then the market or GDX just completely dropped, and it basically prices pretty much in the middle of our range now. So there's nothing to do on this position except wait for theta to decay away the value of the contracts. As you can see, we are only in a very, very small marked loss here of negative $36, which is nothing, because if you look at our original position, our original call was at 38 and now the price is at 41. So that's $3 difference, and there's a contract multiplier of 100, so that would be a $300 loss. But right now, we're nowhere near $300 loss. It's only $36, and we're still in the position, and our deltas are neutral. And as long as we keep doing this, as theta decays away the value of the contract, we are going to make money. And if you look originally at the original strangle, we had 91 cents in premium. Now we have $1.27 in premium. So we have even more premium than what we had when we started, when we opened the original position. And everything is working in our favor. And as long as you know how to do this, it doesn't matter what happens. As long as you're managing your position sizes, you will have an extremely high win rate. You will not be forced to ever have to take a loss. Any adverse move in the market, as you can see, this is a pretty strong move upwards that, would be very difficult to foresee. Hindsight is 2020. By the time of placing this trade, it would have been very difficult to know that the market was going to do this. And the beauty of this is we don't need to know where the market's going to go. We just follow it. We just need to log in at least once a day and just follow the market. Don't let the market move away too far against us. So that's GDX. Now let's look at Macy's. Macy's, we have a pretty much, again, a delta neutral position here. Positive 7.36 deltas. We have an IV rank of 62, which is very nice. And again, there's 33 days left on this contract. So let's have a look at the chart for Macy's. As you can see, price is pretty much in the middle of our range here. Again, let's pull up the options chain. There's a lot more adjustments here because we got whipsawed. As you can see, price did this major move down, then came up, then came down, then went back up again. And it doesn't really matter what the market does. We are just going to follow it. So our original position was at the 15 and 20 strikes. So our original position, our short put was here, which is pretty much where price is now, and our short call was up here at 20. As you can see, this position now is nothing like the one that we originally had. However, it's working. This is now a much better position for us for where the market is. So our original strangle was at 15 and 20. Price moved down. We rolled our call side down to 17. We rolled it down further to 15, and we collected 0.66 cents in premium. And then what we did, price then moved up a little bit, so we rolled our price kept moving further down. So then what we did was we bought back our 15 put and sold a 14 put, just moving our short put down a little bit. We were happy to pay for this because the last adjustments that we made more than covered the cost of this, so that wasn't a problem. Price kept moving further down, so then we rolled from 15, our short call from 15 down to 14. We were at this point in a straddle, and then what we did was we bought the guts, sold the wings. So we bought back our 14 strike strangle, and then we sold a put even higher than what the straddle put was, and we sold at the 14.5 and sold a call at 15, paid a small amount in premium to do so. Price then kept moving higher, so we rolled from 14.5 to 15. We were in a straddle again, and then here what we did was we bought the guts, sold the wings again, and we rolled out into the next month at the same time. So we bought back the 15 strike straddle, and then we sold the current position that we have now, the strangle, at 14 and 17. So if you have a look here, our original position was at the 15 and 20. If we had just left this as our original position, our short put right now would be getting tested. We'd be pretty much at risk of the market moving too far away from us. It still wouldn't be too late. However, you know, price did breach past 15 at one point, and there was no way that you can tell that price is just going to reverse. Nobody knows where the market's going to go, and the major key thing here is I want everyone to understand that you don't need to know where the market's going to go. You don't need to predict direction. You just need to manage your risk and make adjustments and follow the market. So we originally started with 57 cents of credit of premium. Now we're at 40 cents of premium. You know, we have a fairly wide strangle here. I personally don't do any technical analysis, but if you do, you'll notice that our strikes are along major support and resistance levels. So our position is looking pretty good right now, and we've still got 40 cents of premium on this trade. If market moves, we're simply just going to repeat the process and make adjustments, buy the guts, sell the wings. If our strikes get too close to each other, roll out in time. And we're just going to keep doing this over and over and over again until we make money. Everybody should be doing this. Every single person on the planet should be doing this. And as long as you're managing your risk, and you know, you're managing the sizes of your positions, you'll be absolutely fine. So in order to know how much buying power you should be allocating to your positions, we've created a free position sizing template that's available for everyone to use. The link is in the description. Just click the button and it will take you over to this spreadsheet. The way it works is you enter in the size of your portfolio. So say if you have a $12,500 account, you can enter that in there. Below, you can then enter in the current VIX level, so say if it's 29.1, and then everything will be calculated for you. It's super simple. You just need to follow this as your guideline, as to form the backbone of your portfolio, and over the long run you'll be absolutely fine. It takes into account your size, the size of your portfolio. It takes into account the volatility in the overall market. When volatility is high, our edge is higher, so we can be more aggressive. So then you can allocate more money to your positions, or not so much to each position, but you can allocate more of your portfolio to short premium. As long as you follow this, you'll be fine. If you would like to learn in more detail about what we do and how we do it, click the button that says EDS Premium. The link will be in the description, and get yourself signed up. You will have access to our portfolio where you'll be able to see the positions that we place, how we make adjustments, how we manage risk, everything all in real time. It's the same portfolio that we just showed you here. So if you were following along, you could have also been making those adjustments on GDX and Macy's. There's a full course, so whilst you are following along, you can go through the full course. Everything is in there for you, A to Z. No prior knowledge is required. We will teach you everything you need to know. And it is a private community, so if you get stuck at any point, you can just speak to myself directly or with other like-minded individuals that are already inside. And there's a 100% money back guarantee. So once you have studied the full course, followed our trades, if after 6 months you're not profitable, we'll work with you for free until you are, or you can just request a full refund. So it's completely risk-free. It's $9.99 a month to join. The price was £1 a month to join. That was for the first wave of members. That wave is now full. We're on the second wave. Once this second wave is full at $9.99, the price will be increasing for the third wave. So the earlier you get in, the more you are rewarded, and whatever price you get in at, that price is locked in for you, no matter how high the price goes thereafter. So, and the aim of EDS Premium is we want to teach you the skill. We do not want to keep you dependent on us. We do give you access to one of our portfolios. However, you know, we want to teach you the skill. Once you've learned it, you can take it with you for the rest of your life. No one can ever take it away from you, and we want to get you to that point of where you are completely self-sufficient within 6 to 12 months. You're always welcome to stay and be a part of the community, but within 6 to 12 months, you'll be good to go. So with that being said, I will see you guys on the inside.